Happy Pi Day. It's March 4th, 2017. My name's D7. Here at Grok Trade. Markets in the day bearish. The Fed, they're meeting, and everybody's staying pat to figure out what's going to happen. We don't guess, we play what we see. Markets just down, not US dollar, higher. Commodities down. VIX, fear increasing more than 8%. Huge spike. All right, let's take a look here at the spiders. And by a special request off of a YouTube comment, we'll be taking a close look at Apple at the end of the video. All right, Apple will be coming up. But here's the deal, the S&P 500. If you look at two lines, look at the blue line coming up, look at the red line coming up. That is a rising wedge. If I go back, bring in more data, you can see where those lines originated. Okay. Rising wedge. Bearish divergence on the MACD. Zoom back in, and also I'm using TradingView, tradingview.com. You can follow me there at D-7SEVEN. You have to look me up. You can follow me there if you'd like. But here's the deal. Rising wedge, more bearish than it is bullish. We drop. We tried to pop. We tried to do that on Friday. And it did. Monday, Tuesday, today, we just fell right back down. We fell right back down, right down to this area of support. Blow this up so we can see it. Oops, down, man, I hate when I move my lines. Down, hammer, boom! But it didn't rally. It did not rally back to this blue line. Instead, it dropped. It's like a balloon that went higher and then immediately dropped. That's bad news. Came down, touched this area of support, and we rallied back up. A lot of indecision, but we are above the 20-day moving average, which needs to stay there to stay bullish. Anything below this line is bad news. Diamonds. This is the Dow 30. Just down. Nasdaq. I'm really blowing this up so you can see it. Down, we're above the rising EMA exponential moving average. Small caps, though. Small caps, called it a sell, down. We're below all major moving averages. Not a great sign. Banks, I've called it a sell. We down, below all major moving averages. Not a good sign. Financials. Oh, man, did it flirt with death today. Oh, it's... look at this big blue line. Big rising wedge. Goes back here, way back here to November 4th. Come up. And we broke down below it today. Look at this. But then we closed right at it. That is unbelievable. Guys, I've been trading 19 years in the markets. I know these indices better than anybody else because I report on them every day. And it never ceases to amaze me how precise these trend lines are if you draw them correctly. That's what we teach in our mentorship. Actually, man, you could join our mentorship this Saturday, Sunday, and Monday. Invest in yourself before you invest in stock trading because it's an expensive hobby if you do not get properly educated. Because people like myself and our students will victimize you in the markets. Oh, let's look at the US dollar. US dollar down, pops back up. We're above most moving averages. That's no good for commodities. Speaking of that, this is horrible news for crude oil. Crude oil, I called it a sell back here on February 22nd. We dropped, crash and burn. We're at support on Monday yesterday, and then today, bam, to the downside, breaking support. The only hope crude oil has is if this is a jab. If this is a jab, it will come back into the confines of this trend line and this trend line. If it does that within the next couple trading days or before this weekend, this will be considered a jab. But chances are now to the bear side to see more downside action here on crude oil. Gold, called it a sell back here on the 27th. Down, 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 down. We just keep bleeding out. Silver, same thing. Down, 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 down. We just keep bleeding out. VIX, back here on March 7th, said that is a buy. And we keep going higher, 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 higher on fear. So what we want to do is take a look at Apple, as I promised you, and as I look for tech stocks. Where's my Grok tech stocks? Let's go there. I'd be remiss if I didn't do this. Go to Grok Trade, click on Trading Mentor, fill out this form. We will talk to you about the tuition and what 3 days with us, what that will mean to your trading. You want to do that. You will want to do that. And Apple, take a very close look at this. Apple, I still have a buy on it. I had a buy on this January 6, 2017. And my buy is still intact. So zoom in. Let's take a look at this. This is what it has going for it. Rallied higher, 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 higher. Goes into a bullish pennant, but the bullish pennant never broke out over $140. It should have broke out here. Bam! Boom! It should not have done that, or it should have done that. Instead, it went down, 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 challenged the rising 20-day moving average. We come back up, and now we're starting to go higher again. Now, this is not a great pattern because when you go higher, you go down, you come up, and if you cannot make new highs, if you stay at this level, chances are you're going to drop. And that will give you an M for murder. M for murder. And that will give you a double top trend reversal pattern. So this is in dangerous territory. What has happened with this formation right now has very much weakened Apple. So this could be a top for Apple, especially if the markets start to go lower. Now, how it can heal itself is if this turns into a high base breakout. In that case, I'd want to see some sort of play over 140.5, and then I'd want to see it clear 141 with volume, big volume on a step higher. It's the only thing that's going to heal this, because if it doesn't get that, something far more ominous is sure to happen, at least speaking technically. All right, there you have it. If you like it, like it. See you guys this weekend for a 3-day mentorship.